With gold, with the gold price performing the way it's performed for the last 6 months to a year, Chris, have you been surprised at the lackluster performance of gold equities?
Not really, because I mean, when you look at gold's at all-time highs, and you look at the miners. I mean, the miners are nowhere near the highs from where they should be. They should be like blasting past that. But the miners definitely have some serious headwind. COVID, I think, played a lot of havoc on that sector. Not only like fuel is expensive, equipment, labor, everything. It's so expensive to get gold out of the ground now, and I think that's really kept them muted. But typically, when we get into this type of scenario that we're in right now, which is I think the stock market top, we generally see gold do the best. It's the most consistent. So, for example, if the stock market starts to roll over a little bit and starts to go sideways or down, the miners they're stuck in the stock market. They're part of that tide. So even though money will be flowing into it, that tide is still pulling down on it, and those little miners are trying to go up. So it's a struggle for them to perform really well. Whereas gold is disconnected from the stock market, and gold is more of a global asset. So every country and everyone wants to buy it, and it's slow moving and it's expensive. So they kind of buy it and hold it. So there's a natural accumulation going on. I love physical gold. It's what I've been screaming forever. I'm like, if you just want a low volatility, high probability trade, something like an investment that will just be consistent and not scare you and shake you out, gold is the one. And there's comfort in that. You might not get the biggest returns, but there's something about having, if you have a lot of money you want to protect, you don't want to throw it through a roller coaster. I like gold. So miners always struggle. In 2008, we saw gold perform really well, and silver did all right. But miners struggled because they're stuck in that stock market that is going down. So the stock market's constantly pulling down on the equities. They should do fine. I believe we'll see like GDX go to 45 here.
Real quick break here, guys. If you are a mining investor, you are without question familiar with the Golden Triangle region in British Columbia. This is one of the most prolific mining regions in the world due to its vast deposits of gold, silver, and copper. Now, for the last 4 years, Dolly Varden Silver has been busy expanding their high-grade silver deposit in the Triangle, and they are backed by some of the smartest investors in the silver business, including the legendary Eric Sprott, Hecla Mining, U.S. Global Investors, Fidelity, Delbrook Capital, Sprott Resource Corp, and more. If you are curious why the smartest money in the silver business is cozying up to Dolly Varden Silver, then hit the link beneath this video.
I think silver is going to go to 34, 36 in the next month or two. Gold 27, 27.50. But then I think that's when things come to an end, because the long-term monthly chart of the super cycle targets 2,700 for gold. And so once gold hits 2,700, it's like it's game off. Like, who knows what's going to happen? That could be the time where stock market tops, gold tops for a while. But right now, I mean, if the play is just physical gold, GLD, whatever you want. I just like the gold play, simply because the miners are struggling. They've come to life recently, but they are still a struggle. I believe miners will be absolutely amazing once we have this financial reset. I think next year, I mean, anybody who's played the miner space during the beginning of a super cycle, it's life changing, right? So I think that's coming next year, which will be like back into penny mining stocks. They'll all be revalued to some extent. So there's lots of opportunity coming. But I think physical gold is the low risk, high probability play right now to squeeze another 8% out and then call it a day, be happy, and then figure out what to do from there.
Right. Okay. So exposure to gold is heavy right now, expecting a run probably to somewhere around 2,700, but eventually you are expecting this market to roll over. And when that occurs, anything liquid gets called, including mining stocks. Usually gold hits the bid. People need cash to cover their positions, and, and so everything gets whacked, and the ebbing tide drops all ships. Coming out of that is called that, like, at some point, 2025, that's when you would expect positioning in the minor equities to be pretty opportunistic, correct?
Yeah, I think they'll be amazing. I think that'll be the time to get into dividend stocks, companies you love. I remember back in 2009, I bought into a Canadian, it was XTR or something, the Canadian ETF. It was paying 16% dividend. The thing doubled like over the next year. I mean, there's huge opportunity when that stuff comes to life. And that's when I think miners and equities will be great. That's when you can become a long-term investor at that stage. And once the market has reset, you can be like, okay, I'm going to buy these because I like them. I believe in them. They have a good product. You can hold them a long time. Dividends will be great. But right now it's like the opposite. Right now we're like, you're buying at maximum risk. I don't think there's much upside left. It's not worth the risk. And other than in precious metals, so there's potential there, safe potential in gold to the upside is where I see it.
Right, right.